All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back and happy Thursday to you. I am so happy it's Thursday. Although I actually feel like it's Friday for me because I'm out of here, man. I am out. See ya. Wouldn't want to be ya. I'm, I know you guys hate me right now, but then, I deserve this. I do. I deserve this. Anyway, I deserve a pina colada right now. That's all I'm saying. Anyway, we're going to. Damn, I think I had a mosquito bite me on the forehead. Oh, very nice. Anyway, we're going to get started with today's analysis. Now, obviously, it's been a very, very crazy night of movements. So what we've got to do here is we've got to figure out, well, what are we dealing with today? Paul was thinking, we're at a place which is probably not a bad place to short the euro intraday. Ooh, wait, hold on a second. I am out of my dollar yen. Took a little profit there. Done with that. I'm basically just scalping around pre-market. That's it. Nothing super exciting. But I just got out of my dollar yen short. Anyway, going back over to the euro, intraday, at these prices is a good place to be on the short side. Perhaps just realize that we are coming out of a triangle, and I've measured longer term what this could mean for the euro, and frankly, what I'm thinking at this point in time is the euro could, make its way towards the make its way towards the 116 level over the course of the next couple of days, and maybe over the next week. I have to reiterate now, and I'm going to say this again, and I want you guys to understand this fully, that in my opinion, there are a couple prerequisites for the Fed to start raising rates again, or to raise rates, here in July. One of them is the UK not leaving. So when the UK votes to stay, which I'm assuming is going to be the case, the Fed is going to be more apt to raise rates. Now, what that could mean in the near term is that we rally for the next week up towards 116. Once we get up there, we're going to be getting into the, to the jobs report going into, 2 weeks from now. So as we take the next week, making our way up towards 116, once we get towards the jobs report, if we have a decent read on employment, especially with some wage growth, the Fed's probably going to be likely to raise rates. That's why I think any move up towards 116, you got to use it as an opportunity to be on the short side of the euro dollar. Now, does that mean that's exactly what's going to happen? No, but I mean, that's what I'm preparing for. Now, that doesn't mean anything for today. Today, we have probed some pretty key resistance here, okay? And, we could even, arguably say that we're setting up, a double top. Now, I never subscribe to being in a double top unless you break a neckline, but what that does is it puts the 114.15 level, or we could write down the highs, as really key resistance today, because if the euro breaks 114.20, it's going to continue to squeeze, and it's probably going to squeeze higher. I mean, if we break 114 today or over the course of the next 24 hours, we're probably going to see 115 shortly thereafter. Okay, that would be my 2 cents. If we can take out these highs, we're going to 115. Right, that is 127% extension of this last move down. Now, will we take out 114.20? I don't know. And for those of you that are willing to step in front of this train, short the euro. Go ahead. Short the euro, put your stops above the highs, because if we take out those highs, we're probably going to 115 after that. It told you today, the price action told you today, that we are pushing some key resistance. Like I said, you can short it put your stops right above the highs. Or if you're feeling lucky, you feel lucky, do you? Well, then if you do, why don't you wait for a dip down back down towards 113.50 and look to go long with a target up at 114 to 115. Okay, there's a couple ways to play that, right? So the trend line here to come back into play would take us down to 1350. So any dip towards 1350, you can think, hey, instead of shorting the euro, which I feel is a little risky at this point, we get long on a dip. Okay, 113.50 would be support, 114.20 is resistance. I think you need to play that. You notice we're going right into the North American session. We're smack dab in the middle here. So the way I'd look at it is, play it on the long side down here if you can get it, or play it short here, and if it breaks those highs, then you probably want to get stopped out and look for a move up there. All right. Okay. So let me change my pen color actually. All right, let's go over to the pound. So here's the pound, and the pound obviously has staged a nice little squeeze. We broke above yesterday. We broke above the 147 147.50 level. Took a few stops, reset, and then we moved this morning above, and we almost tested the 127% extension. Now, I had a couple of traders show me this chart and say, hey, Blake, we're up against, trendline resistance. I'm like, if it wasn't the Brexit vote, I would have been shorting the pound yesterday. I would have. That's my gig right there, shorting right into that resistance, right into a trend line. But we've actually broken that trend line now. So what that means is the pound is very well bid, okay? And what that also means is dips now down to 147, well, whatever this is, whatever that breakout point is, 147.80. Let's get rid of this. We don't need this one. Okay. Any dip now down to 147.80 is going to be very well supported. If you're in the Bremain camp and you think that the UK is not going anywhere, and you think the pound's going up to 152, which by the way is where I kind of think the pound is going, then I don't think you want to be long right at this moment, right? Why would you want to chase the cable up here as it's approaching the 127% extension? What you want to do from a risk-reward perspective is wait for a dip back down towards 148 and then get long. Okay, you don't want to chase it up here as it's moving up, and this is emotional. This is an emotional move right here. Okay, this is the screw it, I'm short, I got to get out, there's no way the UK is leaving, just get me the hell out of this thing. That's what that move is. Okay, that's what that move is. It's emotions running wild. So instead of that, getting caught up into that, wait for a dip down to 148, put your stop, just below 147.50, you only risk 50 pips, and then you can target for much higher, okay? And if you get stopped out, the trend's reversed, and then you got a false breakout. So that's the way I would be approaching the cable. So resistance now, which I think is going to be key, because even if we push new highs, 149.60 is resistance. And oh, you know what? We have to. I'm gonna put it as bullish today. The cable, the euro dollar still is in a range. Okay, whoops. But the pound is turning bullish, and why do I say it's turning bullish? See that downtrend line? This one right here. Here, let me make it real big for you. See that one? That's been taken out. As long as that's taken out, we're going into a bullish trend right now in the cable. And frankly, I think we're going up into the low 150s before you can really start selling it. That's with a remain vote. Okay, that's with a remain vote. All right, let's go into the dollar Swiss. Okay, so the dollar Swiss may be under a little bit of pressure right now, but guys, on a remain vote, Okay, this is, I need to write this down. If the UK decides to stay, what shit, shoot, sorry, excuse my language. Damn it, where'd my pen go? Everybody takes my pens. You know, kids walk by, they take my pens. My wife walks by my desk, she's like, ooh, look at that pen. You know, everybody takes all my pens. Damn it, and I don't even have one here. I have Sharpies. That's not going to do me any good. You guys hold on one second, okay? I'll be back in just, give me just a 30 seconds. Be right back. Okay, I'm back. All right, sorry about that. I had to grab a pen. So, on a Remain vote, okay, that means the UK is going to stay. I'm looking at the dollar Swiss as an opportunity to be on the long side. Look, people have been buying Swiss francs. Why? They buy them for safety reasons. You know, you don't want to sell Swiss francs longer term, because as an institution, for those of you that don't understand this concept, as an institution, when you have to pay 3/4 of a basis point annually to hold a position in a yield-starved world where it's tough for institutions to even make 3, 4, 5%. It's tough for them to beat the S&P at this point. The last thing you want to do is hold on longer term to a position that's going to take 3/4 basis point or 3/4% off your top. So you're not going to park your money with the Swiss National Bank for a long period of time. You just ain't going to do it. Okay? So right now, any dip that you see here is just pure dollar weakness. You know, like if the euro dollar goes to 116, the dollar Swiss is probably going to drop towards 94 cents, maybe 94.50. I'm going to use that as an opportunity to be on the long side, okay? I'm writing this down myself, because if we get down to 94 to 94.50 and the UK is staying in the EU, which again I think is going to happen, then what I'm going to do here, let's get rid of this, because I don't, if we get a leave vote, then we're heading down there. But I really don't think that's the case, guys. You guys know. I mean, I keep saying this to you. I don't want to sound like a broken record, but I really don't think that's going to happen. So what I want to do is I want to use this opportunity to when we get down here, to be a buyer, okay, at 94, 94.50. You know, that's where I ultimately want to be long the dollar Swiss. So over this next week, like while I'm traveling, if I see the dollar Swiss dip to 94 cents, I'm probably going to get on the long side, even while I'm on vacation. Okay, that's going to be something that I plan on doing. All right. Okay. Now for today, we got a nice little hammer developing already. You know, this could end up being a false frickin' breakdown and then just jam higher. One of the problems that I had with this was this last time back, I think it was maybe May. It was either here in February or here in May. I missed this move. I was waiting for one of these moves, and I watched it just go by me. And I was like, you know, because I just couldn't chase it higher. But I could see this little false breakdown and then whoop, right back up again. I'm not buying it. I'm just telling you that crap always happens to me. You know, you think it's going to dip, and then it starts to dip a little bit and then just reverses higher, and you go, damn it, I missed it again. Well, let's think where we could go. All right, we have a range, right? This has been a pretty solid range. I say it's been pretty solid because for the last 2 weeks, maybe week and a half, we've written down 96.75, 95.75. Remember how many times we've written that down for the Swissy? Yeah, how many times, right? A lot. 161% extension takes us down to 95 cents. I think for today, 95 cents will support. Resistance, well, be at 96 cents. And believe it or not, the Swissy is very range bound. Very range bound. Okay, let's go into the yen. Okay. Hold on 1 second. So the dollar yen, let's see here. I just so you guys know, I did short the dollar yen at 105.62. I already got out at 105.58 or something like that. I already got out of it. But look, this dollar yen on a stay vote, we're going to go higher. We're going to start squeezing. Okay, this is already pushing the envelope as far as risk appetite goes. What I mean by that, for those of you that don't know, the dollar yen is the risk on, risk off tool. As we broke through 105.50, that was telling us that the market was equities were selling off. People were not interested in buying equities or any type of risky assets. But now that we pop our head back above 105.50, that suggests that the market is feeling a little bit better about the current environment. With a remain vote, if the UK decides to stay in the EU, what that does is it puts at risk a continued move higher in risky assets. So what I mean by that is stocks could continue to go higher, bonds will drop, yields will rally. As yields rally, the dollar yen tends to rally anyway. So what we have here is the possibility of the dollar yen, moving back up towards, maybe 107.50 or higher over the course of the next week or two. For those of you guys that are, you're going to be trading over the next week, the UK decides to stay. The S&P rallies towards 2200 as we think it's going to, or at least I think it's going to. The dollar yen will more than likely, challenge this resistance, maybe up towards 108 yen over the course of the next couple of days. It also means that all the other yen pairs would rally too: pound yen, euro yen, Aussie yen, you name it. Okay, so keep your eye on the dollar yen. This is going to be a very important resistance. Now we are here. Let me remove that because that's exactly why I sold 105.50 earlier, and then I added a little bit to it. That's why I had a short there. We're probing pretty key resistance today. I would say that we could continue higher. This is, I would assume, right here is where anybody who's short longer term, who's like, look, I'm expecting a move down to 100 yen. Stocks are going to come down. Blah 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 blah. They are going to remove their, they're going to remove their shorts, I believe, on a move above 106.40. Okay, because you got to give it a little bit of room. So 106.40, that's going to be key resistance. I think we are at resistance right now, but that's going to be really key. Now, if for some reason, and I'm going to just say this, and I want to say this out loud so you guys hear it. Obviously, this is something that I'm thinking. If for some reason we push back below 104.80 right here, if for some reason we drop and we push back below, it's wrong. Now, when I say something's wrong, what I mean is something's wrong in the voting process. Something is wrong in something is up. Okay. Again, I don't think that's going to necessarily be the. If we drop below 104.80, that's got to make you believe that something is not jiving with what's happening in the voting process. All right. So I'm going to put 104.80 and I'm going to put an asterisk there. Now, sometimes the market sniffs out things before everybody else. You know, the media, um, the media may, and by the way, we're turning from bearish, which we've been, to range today because we're trying to clear. Actually, you know what? I'm gonna keep it bearish for right now, but just realize that it could be switching to range here over the next week, even though I won't be here. If we dip back below 104.80, that's the market sniffing out something's not right. All right? Okay. So just keep that in mind. I think, I think as traders, we've got to keep, oh, hey, look at that. Profitable in the peso. Look at the peso just ramping up right now. Well, I think I might have to take some profits here in a little bit. Chalk it up to a successful pre-Hawaii trip trading day. Boop, I'm out. Okay, I'm out of the peso. I just took a little bit of profits there on the peso that I bought earlier. I bought it down here and just sold it and said, done with it. Okay, anyway, going back to, for those of you that were long the dollar peso with me. So going back to the dollar yen, if for some reason we dip below 104.80, that's the market sniffing out something. And that's something that we need to be very well aware of. All right, when I come back, we're going to continue on with our analysis. Glad that you all are here. Happy Thursday. And by the way, have you guys not seen the Nikkei? I know some of you came in a little bit late, so this is one of the other things that would freak me out if I was long the dollar yen right now, which I'm not, but I'm just saying. I'm not trading the dollar yen. I already shorted it, made a little bit of money, and I'm done with it. But look at the Nikkei right here. Okay? The Nikkei came back to, remember this triangle? Remember the breakdown of the triangle from 2 weeks ago? Remember that? We came back, retested that underside of that trend line. We hit the 618. We hit the 618 and we've rejected it. Careful. Careful out there. Everybody's pretty bullish. Back in a few minutes. Don't go anywhere. All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We're gonna get cooking through all this analysis. So I just realized I'm falling a little bit behind here. I've been chit-chatting about Brexits and moves and blah blah blah. So it's time to really kind of get moving. All right, so the dollar Canadian. The dollar Canadian's down pretty aggressively. We pushed. Now look at this hammer. This is crazy, dude. All right, we just here. This is nuts. We just hit 161% extension. Check this out. Ah, damn it. Damn it. Trying to grab something here. Check this out. So we had a rally yesterday. Oh, never mind. Okay, I didn't ping the top there. But look, we sold off, broke below this triangle low, right? Broke below the triangle low and support, and we've spiked all the way back. Look at this wick. Dude, if I was short the dollar Canadian right now, I'd be pissed. If I was short the dollar Canadian, I'd be like, what? You know, this thing just reversed really hardcore. I'm going to tell you right now, if we break above this price right here, which is 127.60, it is going to absolutely reverse screw everybody. Everybody. I mean, the Canadian's pretty damn good and efficient at doing that. And by the way, I do have Canadian exposure, just so you know. I'm long the Aussie Canadian. I'm long this currency pair right now, and I've been long for the last couple of weeks. If the dollar Canadian comes out and takes out that 127.50, I'll be happy, because that means the Aussie Canadian's probably ripping as a result. But I'm telling you, man, we're talking about a big possible screw job right here. 127.60, and we're only 20 pips away. That's going to really hurt some people. 127.60. That's resistance right now. Support is going to be today's lows, which comes in at 126.77, so 126.80. Okay, we're in a range. Kiwi. Now, this Kiwi has been very strong. Now, I also want to point out that the Kiwi hit this morning, and I told everybody in our chat room when we were there, I said, listen, we just hit 161% extension at 72.50. I shorted the New Zealand yen. Just so you know, I accidentally shorted 4 times my normal position size. It was a fat finger short Kiwi yen. I ended up making like 9 pips. So it was like, to me, it was like 40 pips almost, because I shorted 4 times my normal amount. That was a total mistake early this morning. But anyway, because I knew the New Zealand dollar was up here, and I knew the dollar yen had, was pushing some major resistance. So I sold New Zealand yen. I sold it at 76.70, which ended. I mean, you look back, it was actually a really good price. I sold it at 76.70, and we hit a high of 75. Total accident. The size of my position was total accident. Anyway, the New Zealand yen, this is pretty key resistance where we're at today, all the way around. Now, if you notice, okay, my data is different than your data. Depends on your broker and who you use. We had resistance, previous support, current resistance, okay, 618 retracement fib, 38% retracement fib. I had another trader this morning which had said, oh, hey Blake, the New Zealand dollar is at the 38% retracement of its high. Here, let's high to low. We're at a 38% retracement. Yeah, it depends on your data. It depends on the data you're using. The way I'm looking at the Kiwi right now is it's pretty damn bullish. And I don't like saying that because I'm actually short the Kiwi through the Aussie New Zealand. But I have to admit, the Kiwi looks pretty damn bullish. And frankly, I think the Kiwi looks like we can get up to 75, 76 cents. If I'm right, and the S&P goes to 2200, the Kiwi is going up here somewhere. And I'm going to be happy to sell it up there too, just so you know. All right. Now, right now it looks pretty bullish. And as long as we are above 71.50, it is bullish. Okay. Resistance is the 161% extension, which is 72.50. Should be pretty key resistance for today. Let's go take a look at the Aussie. All right, here's the Aussie dollar. Now the Aussie, somebody yesterday pulled this up and said that's a cup and handle pattern. I don't know about you guys. I've never in my life, ever. Okay, if you think about a coffee mug looks like this, right? That's a coffee mug. Or if you take a cup, a teacup will look like this, right? That's a teacup. A cup and handle is a cup handle. I've never seen a teacup look like this. Correct me if I'm wrong. Maybe you have. Maybe you have some really... I've almost said it, but I'm not going to say it. Maybe you have some pretty jacked up dinnerware at your house where you have a cup that looks like that. I've never seen a cup that looks like that. Okay, if you don't understand the reasoning behind a cup and handle pattern and why it's so powerful, let me explain. What happens is you get a rally, okay? I'm going to just pretend this was really one. You get a rally, you stop at resistance, you develop a handle or a cup, You hit resist. Whoops, damn it. I don't want to do that. So you get this rally, you stop at resistance, you get this consolidation, you hit resistance again, you get a handle. And the reason why this is so powerful is because you have resistance here, and you have stops building all the way above here, all through here. And then so when you break out, it's triggering all sorts of stops that bring it higher. Okay? This is not a cup and handle pattern. It's not. You can't measure from here to here and expect to move from there to there. Now we still may get a move to there, but I think it's poor analysis. All right, it's poor analysis. You're gonna end up getting hurt longer term. You're gonna find your consistency drops dramatically on these types of patterns if you read them incorrectly. That's why head and shoulder patterns, cup and handle patterns, you got to do it by the book. If you're not doing it by the book, it's kind of like, how many of you guys play blackjack? How many of you guys play blackjack? I enjoy playing blackjack. It's fun. I never do it aggressively with a lot of money because I know odds are stacked against me. I'm not a big gambler, but I love to play blackjack because I think it's a fun game. When I go to Vegas, I'll put down $100, and I have friends that'll bet like thousands of dollars, and I'll just bet $100, and I just do it more for entertainment value. But how many of you guys play blackjack? Really, just out of hundreds, like 500 of you guys that have been listening in this morning, really just 5 people play blackjack? Are you serious? Okay. No, most of you are answering. Okay, if you play blackjack, do you know what the rule is when you have a when the dealer shows a 6? When the dealer shows a 6, should you hit? If the dealer shows a 6, should you hit? Hell to the no. I mean, you'd be freaking stupid to hit on a but there's people that do it, right? There's people that do it. If the dealer's showing a 6, they have a 10 underneath. You assume they're going to pull another face card because there's more face cards in the shoe than anything else. So more than likely they're going to bust. You want to let the dealer bust, right? So if the dealer's showing a 6 and you've got and you've got whatever you've got, unless you've got a 7 or an 11 or a 10, then you might double, maybe even a 9. But if you've got a 16 and they're showing a 6, you're going to let the dealer bust, right? Do you know that person that hits? When the dealer shows a 6, you've got a 13, or the person's got a 13. Do you know the guy that hits on a 13 when the dealer's showing a 6? That's the guy that I want to turn to and punch him in the face. It messes up the cards, right, Alex? You know that guy that hits on a 13 when the dealer's showing a 6, that's the same thing right now as saying this is a cup and handle and I'm getting long based on a cup and handle right here. That's the same guy. You might make money, you might win, but longer term, you're going to get royally screwed. But what you're doing is you're validating your decision because you ended up making money. Does that make sense? Are you guys with me? Oh, go Canadian. It's your birthday. Go Canadian. All right. So anyway, I just gave you guys a little bit of a lecture there. I didn't mean to. All right. So anyway, does the Aussie look like it's breaking higher? Yeah, it sure does. I hope I made my point. At least those of you that play blackjack know what the hell I'm talking about. So we hit a 618. We spiked into the 76 cent level. But look at this 4-hour candle. I mean, I'll tell you, that's not a pretty 4-hour candle. We got about 45 minutes. That could be a shooting star. 76 cents is big resistance. If you want to trade this to the long side, like if it were me, and I'm done trading for today, just so you all know. I didn't think I was going to trade today. Made a little bit of money. I made some pina colada money. I'm done. If I was going to get long the Aussie, I get long down at 75 cents. Okay. Just keep in mind we're rejecting the 618, which is from a Fibonacci standpoint, this is a key resistance. That's why I have it highlighted in red all the time. Okay. That's not a pretty candle that you're seeing there. How can I put semi-bullish? Can I put can you put a light green in here? I'm going to keep it range for right now, but a little nervous getting too bullish this thing. Relative strength is not divergent. High here. That RSI was higher. You know, I'm gonna put it as bullish. Okay, let's go over to the dollar index. Okay, here's the Dixie. Now, the dollar index broke the 618 retracement. So if you look at here's the fib, right? We were bottomed, and then we broke below. So the 786 retracement comes in right here at 92.75. And then any move now up to 93, any move up to 93.50 is probably going to be resistance. 93.50. I'm trying to move a little quicker here. 92, what did I say? 92.75? Hold on. Yeah, 92.75. Look, you know, I'm kind of hoping right now, and you know, keep in mind that we're around a ton of support down here. I'm kind of hoping we dip back down towards this 92 in the dollar, you know, to get on the long side. But you know, that's just me. Anyway, I still think we're in a big range, big fat range. All right, here's the peso. I bought the peso a little earlier and I already sold it. I'm in and out, kind of like the burger. We had a 261% extension of this last move up today. 786 retracement, we're kind of pausing around. I think that if you want to trade on the long side of the peso, as long as you don't risk below that. I'm going to write down 1821 today. And yes, I think we're in a big old honking range. We turned it from bullish to range yesterday because we've made a lower high recently. So this is back in the range. If you want to sell the peso, which I think is, by the way, I think this is the better trade, just so you, just for your knowledge, because I think that the UK is going to stay. So what I would do is I'd probably be a seller back up here at 1850. If you can get that right there, that I think is going to be the better trade for today. If you can make a move back up to 1850 to be on the short side. Okay, I'm just trying to move quickly here the last couple of currency pairs. Here is the US dollar Norwegian krona. So the US dollar Norwegian krona is coming back down towards channel support. We've talked about how key all this support is. Here, let's get rid of this. We don't need that. We don't need that. We don't need that. We don't need that. We need that. Okay. Support comes in at 8. At this point, 811. I know we've been writing this down forever. So 811. Oops. 11. Dyslexia kicking in. 8. Actually, I'm not going to write down 850. I know I wrote down 850 the other day, but we're obviously not going that direction. We're going this direction. Right? Right. So, okay. So now resistance will be pretty hard to get above at 823. 823. We are still in a range, guys. You know, I would think the lower end of this range is playable. Like if you want to, instead of shorting, okay, just so you guys know, I think that crude is done. What do I mean by that? I think crude at $50, $51. I don't think it's going to get much above that, even with the Bermain vote. So if you want to play, a dollar on the long side, think about playing the U.S. dollar Norwegian krona, because if crude rolls back over again, we're just going to go boom, boom, right back up again, right? Think about this. I mean, you could really manage your risk pretty well if getting long on the U.S. dollar Norwegian krona at 811. You'd only have to risk maybe 500 pips, to make a move back up to 824. So you risk maybe 500 pips, maybe 300 pips to make 1,000. That's not a bad risk reward down there to be on the long side. I'd be more inclined to do that than to be long the euro, or short the euro, excuse me. Okay, so here's the U.S. dollar Swedish krona. This is interesting because the U.S. dollar Swedish krona, this shouldn't surprise, it doesn't surprise me, and it shouldn't surprise you. So we had a false breakout above the highs. False breakouts usually lead to break down. So false breakout, breaking down, 809 will be support today. 8.09. That will be pretty key support. And resistance now is at 821. And we are in a range too. We are in a range. Okay. Your bias chart is finished, finito, done. There you go. All right, guys. So I'm going to take a break. When I come back, we've got weekly unemployment claims coming out. We have weekly unemployment claims. After that, I'm going to spend the next half an hour talking about a Bermain or a Brexit vote and kind of prices I'm looking at. I'm going to try to take some of your questions too, but I want to spend at least 10-15 minutes talking about some of the bigger moves that we can see here over the next week. Because I'm not going to be here. I'm trying to prepare myself too for what to expect, and I'm trying to help you guys prepare. So I'll be back in a few minutes. Thanks for being here, guys. TGIT. Happy Thursday.